Guys, how are you doing? Hope you are doing well. Welcome back to my diary. If you are new here, in this space I talk about forex related stuff, the mistake I've made, and most important, the lesson that I keep making every day so that I can share with you. So thank you so much for the love that you keep showing me, and you're almost heading to 1,000 subscribers. So ensure that you have already subscribed because it is free. Okay. So coming into today's video, I want to show you how you analyze the market and just to know how to plan ahead of the market. So by now you already know. I give you an example, like I show you in form of a diagram. Then from there we can just go to the chart. Okay. So this is one type of a market where we have a bullish market where the structure of the market is being broken toward the upside, and this is another type of a market where we have the same type of market but the structure is being broken toward the downside, and we call it a downtrend market. And from there then we have this type of a market here where the market is consolidating either on the buyer side, on the bearish side, where the buyers know the sellers have the potential to push the market either upward or downward. We call this type of a market a ranging channel. And now in today's video we want to see what happened at a ranging channel, because we have three outcomes. The first outcome here, before we go into today's video, let's say this is our resistance. By now you should be familiar with how I always analyze the market, but if you want more you can join my online classes, especially the December classes, where we learn more about trading for 2 weeks, and my charges are 26,000 Kenyan shillings. And from there we analyze we analyze the market. Sorry, we learn more about the market, especially because there's no a lot of movement during the December, so the market is consolidating a lot. So that is the best time for you to come to class. So ensure, if you want to learn in deeper way, come to my class and I'll give you all this information. Okay, so as I'm saying, this is a simple way of support and resistance. So this is our market where we find that the buyers have been pushing this market toward the upside. It can be on the monthly time frame, weekly time frame, daily time frame. So it depends where the consolidation have been happening. So I'm not saying that this market now is on lower time frame. I keep saying lower time frame are used for entry. So this is a good example of a consolidation market, and you can see this market is ranging toward this area. Remember, I've said it can be a bullish market where the overall trend of the market, it has been buying for quite a long period of time, and after some time we enter a consolidation market. But now what do you do in case you find this kind of a market, and especially if it is from the monthly? You can't say because it is consolidating on monthly I can't trade this market. What if the consolidation have been happening for 2 years? It means you have not been trading that market for 2 years. That is why we have other time frame. So what you have to do, rule number one, you either wait for the if you want to sell the market, you either wait for the buyers to come. If they fail to break this resistance here, then you can start preparing to do what? To sell the market. That is one. Or you can wait for the buyers to come around this support. If the sellers fail to break toward the downside, then you can start buying the market. But if that is not possible, then you have to wait for the buyers. If you want to continue buying the market, buyers to break toward the upside, wait for the retracement, then you continue buying the market. Or you wait for the sellers again, they come down, break toward the downside. After breaking, then you can continue selling the market. I've already done a video on how to buy and sell inside this box, but not in the middle. You have to wait for the buyers or the sellers to come to where we have our main point of interest. Then from there you can go to the lower time frame. Now let's go to the chart so that we can see how to enter the market when the sellers have already broken at the support. This is the support. So let's go to the chart so that we can see what has been happening in the market. At least now you have an idea. In case the support is broken, what will I do? In case the market is at resistance, what do I do? You don't have to be fixed on one side that this is what is going to happen to the chart. So you must have an idea. In case this happens, it means my strategy is not wrong. It was not maybe the right time. Like, you just have to have an idea. You don't have to switch your strategy. So this is Eurocard. And on Eurocard, you can see how this market has been ranging. You can just go and watch that market from the weekly, daily, all that. But I just want to show you how the market has been behaving. This is Eurocard on the daily time frame. Can you see this consolidation? The market started consolidating on August 24. So these candles here, because it is daily, you can see how the buyers and the sellers have been pushing the market toward the upside, the downside, and all this from the support to the resistance, that is around 300 pips, around 300 290. Let's say that is around 200 pips or 300 pips, depending on where you have already entered the market. But now let's see what happened when the support has already been broken. Remember, when support is broken, it now becomes a resistance. Okay, the moment support becomes the moment support is broken, it becomes a resistance. Of course, I've said you have to wait for the market to break, come down, retrace, and then you enter the market. But let's go to the 4 hour so that we can have the more details, a lot of information, so that we can enter the market, because we say we have to analyze the market from the lower time frame, then we go to the from the higher time frame, then we can go to the lower time frame. Okay, so this is 4 hour. You can see after the market has already gone to the resistance, after having this kind of a pattern, all these I've already done this kind of videos. You can see on the 4 hour we already have a pattern like the head and shoulder. Remember, we want to see this kind of patterns happening on the lower time frame, showing us it is time for us to enter the market. If you cannot see the head and shoulder, then you can just use the line chart. You can see this is a very good example of a head and shoulder. You can say the market has a double top, or you can say the market has been consolidating. At the end of the day, we want to see all this information. You can just go and watch that video about sniper entry. I did a whole video about, but now remember, the market was at where? The market was at resistance. That is why we were looking for sell entry. Now the moment now we find that already support has already been broken, because if we were to buy this market, we were to do the same thing that was happening here. But now you can see the market broke at our support, it automatically becomes our resistance. Okay, the moment support breaks, now remember, it now becomes our resistance. How do you enter this market? The same thing. You just have to wait for the market to drop, come back and retrace. The moment this market is dropping, it simply means it is creating a new lower low. Then you have to wait for the retracement, which will give us a new lower high, and from the lower high, that is when we start preparing to enter the market. Remember, you cannot enter the market until the market has already finish retracing. That is why we have a new lower high, and we are anticipating that our lower high, it will not violate this area, this our support, because it is an area of interest where the buyers and sellers, they are reacting toward this area. So the moment we have this type of a retracement, then you have to look for patterns. Remember, these patterns, you can have them on the higher time frame, but even on the lower time frame, we want them so that we can enter the market. If it is not clear, just use a line chart and you can see the first pattern that is giving us a confluence for us to enter the market. We want to see a good pattern like a head and shoulder. You can see this is a very good pattern that we call a head and shoulder. It is a reversal pattern. If you cannot see this pattern, just find a double top. A double top is where we have two tops touching one toward this area, and the neckline is broken. Then you have to wait for the retracement. You can enter the market. If you cannot find those two type of a pattern, just wait for the if the market is consolidating, then from there you can have your entry. So ensure at least you have either a double top, because on this case we are selling the market. If you cannot see a double top, look for a head and shoulder, and it should be at the resistance. If you cannot see a head and shoulder, look for a consolidating market on the lower time frame. Can you see how this market has been consolidating around this area? All this pattern, they are telling you it is time for you to enter the market. Can you see how the market, we have three patterns in one? The same case here, we have the same pattern in one. So when you have this type of a pattern, what do? You have to either wait for the sellers to come in and enter the market. But entering the market, you also need to have that confidence for you to enter the market. And in this case, the easiest way for you to say you have the reason for you to enter the market, we want to see a bearish engulfing candle. Can you see here? This is a very good example of a bearish engulfing candle where we have a red candle engulfing this small candle here, and then immediately after seeing this candle close, you enter the market. If you are not comfortable, you have to wait for the neckline of this head and shoulder double top consolidation to break. After it has already broken, wait for the retracement, then you do what? Enter the market. So this is the easiest way for you to analyze the market from the higher time frame, starting from the weekly, daily, and entering with those all those confirmation. I'm looking for a short position here where I'm saying where you enter the market on the lower time frame, and you ensure your stop loss will always be above, because we have already said this is the current lower high the market has already created. This is the last high the market went before it did what? It went down. So always ensure your stop loss is above this current lower high that has been created, or you can use the ATR. And for your TP, use the higher time frame, because you cannot use the lower time frame to know your TP. Higher time frame will always give us the direction of that market. Let's see the higher time frame where the market is most likely to go to, so that we can know where to place our TP. Can you see? This is where the market went. Let me squeeze the chart. This is where the market went after breaking here. You see how the market, it came, it broke here, creating a new lower low, came back and retested, and this is how the market has been moving. So where do you place your TP? You have to place your TP where we have the last structure that was created, because we don't know if ever the sellers can come around here, and when they come here, they do what? They reverse and continue either going up, consolidating, all that. But at the end of the day, at least you have an idea of where the market is heading to. And if the sellers have the momentum again, then you can continue selling the market. If the sellers come here, break, retest, all that, that is how you trade a market that has already broken at support, because it is the same thing. The market will never move on a straight line. So the moment support has been broken, it becomes a resistance where the buyers will try to push that market toward the upside. They are rejected again, the sellers come down, break the structure, and that is how the market will now move. By the time you go to the higher time frame, you'll just see a very big candle, like you'll just see either the red candle, and there's nothing, like the market has been retracing. But now when you go to the lower time frame, that is how you find that the market has been moving. You can see this market has already gone for how many pips. Let's see how many pips you are given. This is the 4-hour time frame. You already have like how many pips? You already have like 100 pips, and your stop loss was around 31 pips, because I keep saying I'm not a scalper. So I try as much as possible to have as much as I have a stop loss, but you have to consider this is not scalping. So your stop loss should be around 40-50 pips, depending with the lot size that you are using. And when you come to the daily time frame, you just see that it is only two candles. Can you see? It is only two candles. There's nothing much that happened in that market. So you can find on the lower time there's a lot of information, but now when you come to the daily time frame, this is how the market went. It was consolidating, broke down towards the downside, and after breaking, it came back, retested the same area. After retesting, you can see how the market has already been going, and it went again to another area where we can call it support, and this is how the same cycle continue. And in a simple way, you can see the same distance. Can you see this distance that the market was consolidating around? You can just see that it has already been covered. Can you see? It is the same thing, like the market just covers the same distance, but you cannot assume now the market will go exactly to this distance, but at least you have an idea of how the market is reacting. So that is how you enter the market in case support is broken, and if resistance is broken, you just have to invert the scale. Let's go to the 4-hour, and we invert this scale. It will be the same thing. You just have to come here, Let's see if ever the same thing was happening. If you were to buy this market, can you see it is the same thing? So the moment you know we are buying the market, you apply the same information you are selling the market. If you are selling the market and the market is buying, you just apply the same information. So you don't have to be like confused. What do I do? Why is the market behaving like this? You have to have an idea. The market has already broken at support. What do I do? The market has already broken at resistance. What do I do? It is the same case. And you can see the same entry you are using. This pattern will always repeat themselves over and over again. So I hope you have learned something. I've given you free information, so at least try and go and practice this information, because I know it will help you along the way. And again, I've said, if you want to join my classes, yes, I do offer online classes from Monday to Friday. Charges are $200 if you're not in Kenya, but if you're in Kenya, that is 26,000 Kenyan shillings for 2 weeks. And after the 2 weeks, we continue with the mentorship, especially now during the December. We are almost heading to the December holiday, so ensure you register. And I'll leave my WhatsApp number here so that you can contact me and you can learn more about the classes. Let me just give you my number here so that it will be easy. This is my number, so ensure you use this number, 0725503330. This is my only number. Ensure this is the number that you are talking to before you get scammed. At the end of the day, it is only about learning. I don't give signal, but I give lessons and classes. From the information that I give, then you apply that information, and that is how you produce your own signal. So thank you so much for watching today's video. Until next time,